If I had to start AI trading again in 2026, I wouldn't do what most beginners are doing right now. Because the truth is, most people either lose money using random bots, or they rely on AI without actually understanding how the market works. So in this video, I'm going to break down exactly what I would do step by step if I was starting from zero using AI the smart way. Let's start with the basics. What is AI trading? AI trading is simply using algorithms or bots to analyze the market and execute trades automatically. But here's where most people get it wrong. They think AI equals guaranteed profits. That's not true. AI is just a tool. If you give it a bad strategy, it will lose money faster than a human. Step 1. I would learn market structure first. Before touching any AI, I would understand market structure, higher highs, lower lows, liquidity, supply and demand, fair value gaps. Why? Because AI works best when it follows a clear, rule-based strategy. If you don't understand the logic, you won't know if the bot is working or failing. Step 2. I would avoid plug-and-play bots. Most beginners go on YouTube and search Best AI Trading Bot 2026. Then they install something and hope it makes money. That's the fastest way to blow your account. Customization bots, where I control the strategy. Bots that are customization bots, where I control the strategy. Bots that are transparent. Step 3. I would start with one simple strategy. If I started again, I would not overcomplicate things. I'd use something like 4-hour buy, 5-minute or 15-minute entry, liquidity sweep, FVG entry simple, repeatable, testable. Because AI performs best with clear rules, not complex guessing. Now, if you want to make this easier, the most important tool you need is a liquidity indicator. Because instead of guessing where the market will move, you can actually see where liquidity is sitting, which is what smart money targets. I've put the link to the liquidity indicator in the pinned comment, so you can set it up and follow along with this strategy. Step 4. I would backtest everything. This is where most traders fail. They don't test. If I started in 2026, I would go back 3 to 6 months on charts, mark every setup, track win rate, track risk to reward. Because AI trading is not about guessing, it's about data. Step 5. I would use AI for execution, not decision making. This is very important. I would not let AI fully control everything. Instead, I would use AI to execute trades faster, manage risk automatically, remove emotions, but I would still control strategy, market bias, entry logic. This is how professionals use AI. Step 6. Risk management is everything, even with AI. If your risk management is bad, you will lose. What I would do: risk 1% per trade, set fixed stop loss, aim for at least 1.2 risk to reward. AI doesn't fix bad discipline, it just automates it. Step 7. Focus on one pair. Another mistake beginners make: trading everything. If I started again, I would only trade EUR/USD or GBP/USD because cleaner setups, more predictable behavior, easier to train your AI system. Step 8. Scale slowly. Once I see consistent results, then I scale, not before. I would start small, grow gradually, possibly move to prop firm challenges later because consistency beats hype. So if I had to start AI trading in 2026 from scratch, I wouldn't chase bots, I wouldn't rely on hype, I would focus on understanding the market. Using AI as a tool, not a shortcut, building a simple, repeatable system, and most importantly, following liquidity, because that's where the real moves happen. If you want to get started, check the liquidity indicator link in the pinned comment and start building your strategy the right way.
Okay, so if you get on the markets at this point right here and you ask yourself, is price more likely to come all the way down here and take out this major low? I'm sure you understand price is most likely to go up and take out this major high here where there's lots of liquidity, where there's lots of stop loss orders. So when we get on the lower time frames, we're only going to look to buy, we're only going to look for longs. Okay, so here we are on the lower time frames. This is the major high that we know price is going to go for. So this red shaded box, this is the sweep, and the gray shaded box, this is the actual sweep itself, right? This wick goes just below it and it quickly and aggressively shoots off. That is what a liquidity sweep actually is. The AI is only considering this time frame, right? So it's going to give you the win rate based off just this time frame alone. What we really want to do is we want to enter on this retracement. So we have our bias, we have the sweep, price is quickly shot off. We just want to ride price up, right? We want to ride price up to this major high all the way up here, right? For me, I think the easiest entry, especially when you're trading crypto, Fibonacci retracement. Very easy, very simple. Your stop is always fixed at the low. For your take profit, this is where things get interesting. Minimum, if you're using Fibonacci, target this major high.
If this video helped you, make sure to like and subscribe because I'm going to be breaking down more real trading strategies and AI setups step by step.